Hello, my name is Nicholas Pfaff. I'm the head of sustainable finance at ICMA, and I'm the secretary of the Green Bond Principles, Social Bond Principles. I hope you're all well in these challenging times. It is my pleasure to welcome you and to coordinate this event on sustainability-linked bonds and our new guidance. We have more than, well, almost 1,000 registrations for this event across the globe. So depending on where you are, good morning, good afternoon, and good evening. Coming to the agenda, right after my remarks, we will go to Denise Odaro, who is the head of Bond Investor Relations at IFC, but also the chair of the Executive Committee of the GBP SBB. At 14:05 CET, approximately, the first panel will be on the new guidance that we've published for the SLB market, and that session will be chaired by Isabelle Laurent of the European Bank for Reconstruction and Development. At 14:40, the next panel will be the role of external reviews in the SLB market, and this session will be moderated by Marilyn Ceci of JP Morgan. And at 15:20, we have the pleasure of a keynote from Pauline Lez of the Banque de France, and this will be on the eligibility of SLBs for the Eurosystem asset purchase and collateral programs. We will close at approximately 15:30. I'm now going to turn to Denise Odaro.
Thank you very much, Nicholas. Greetings and a warm welcome to all of you. It's great to see the thriving interest in this product with over 1,000 of you registered for this event. You know, we think of it as truly the fact that sustainability-linked bonds have risen as innovation out of the reality of the need to considerably scale our efforts to meet and beat the various sustainability goals we have identified as crucial for global development. So as a population, we are battling challenges that have never been seen at the measures that are our current reality. So from climate change, biodiversity loss, pandemics, rising inequalities, and much more. And these are enormous challenges, but they are also enormous opportunities for those corporates that recognize the market gap for sustainable alternatives to our current business models. At the Executive Committee of the Green, Social and Sustainability Linked Bond Principles, we task ourselves to effectively align capital markets to channel funding towards sustainable alternatives and strategies at scale. And the Sustainability Linked Bond Principles is a consequence of this task and effort. So the aim being to further develop the key role that debt markets can play in funding and encouraging companies to contribute to sustainability, be it from an environmental, social, or governance perspective. From our experience with the preceding use of proceed bonds, green social bonds and sustainability bonds, we know that for such a role to be played in excellence and for the market to thrive, integrity is of utmost importance, Hence, the principles as they are now provide guidelines that recommend structuring features, disclosure and reporting. And they're applicable, as you know, to all types of issuers and any type of financial capital market instrument. So issuance aligned to the SLBP is an investment opportunity with transparent credentials. And I want to assure you that the sustainability-linked bond principles and the complementary guidelines, such as those that we're going to discuss today, these are collaborative in nature and based on the contributions from the member and observer community. And some of you, of course, on today's event are part of that community. Since we published the principles last June, what has followed has been a profoundly positive acceptance by the market. In September, we saw the ECB announce that it would accept SLBs as collateral and that it would start buying them under the asset purchase programs. The guidance since last June has empowered issuers and investors alike to partake in this new product. And we've seen transactions from sectors as varied as shipping to fashion, etc. And by the end of this month, I believe that we would probably have hit, in fact, where we were at the end of last year, We've issued so far year to date, I think, over $7 billion. And as at the end of last year, around 8.5 had been issued. So I want to close by thanking you all for your interest and support in pushing the capital market to do more to tackle sustainability. We are here as a result of that. Thankfully, the SLB is standing, as I see it, on the shoulder of giants, having come after the green and social bonds. This webinar will provide you with an update on the new guidance and market practice. I encourage you, though, to review the recently launched Q&A, which were designed to promote understanding of this financial instrument, and of course, the role that it plays in an issuer's overall sustainability strategy. So while SLBs might be the new kid on the block, they have already given an impressively wide array of issuers the opportunity to finance their transition towards a more sustainable future. So I will encourage you, as I said, to have a look at the website and the resource center where we've put together all this information to complement the principles. And I very much look forward to the rest of the event and hope you do too. Thank you very much. And I hand over to Isabelle Laurent.
Thank you very much, Denise. And I wonder if the other participants, please, in the panel could turn their videos on. So today we have an excellent panel for you to discuss new guidance and market practice in the sustainability-linked bond market. Laurie Chenet is co-head of Green and Sustainable Origination EMEA at Natixis, who have been jointly coordinating the Sustainability-Linked Bond Working Group since it was initiated. Lars Iberholm is head of Sustainable Banking Denmark at Skandinaviska in Skildebanken. Ecb jointly coordinated the Sustainability-Linked Bond Working Group until December 2020, including in the run-up to the publication of the Sustainability-Linked Bond Principles. And Nicole Della Vedova is head of corporate finance at NL Group, which was the original issuer of sustainability-linked bonds and has been very active in the working group. Welcome to you all. So maybe Lars, I could start with you. Last June, working group members had suggested a long list of over 70 questions that would be helpful in bringing guidance to the SLB market. In February this year, this was whittled down to the 27 that were published. How were the final questions selected? And what were the challenges as a coordinator in meeting the main expectations of the market, please?
Thank you. Thank you so much, Isabel. As you mentioned, the 70 question was reduced during the process to 27, and it was a process. And of course, what we did, we went out, collected all the questions. We started to group them and organize them, and of course, some of the questions gave some overlaps and had a repetitive overlay, and somehow that reduced the questions to a certain extent. Then we divided the questions into to participants from the working group to come up with their basically answer to the questions, and that gave a process where we got an answer and tried to get consensus in the wider working group. And here, of course, there were discussions, fruitful discussions around the questions, and many of the questions we were not able to answer because we couldn't really agree. And I think that's also a main principle, within the working groups, that we are not supposed to come with the answers, but we are supposed to try to encourage the market to develop. And therefore, actually, if we were unable to find the answer, maybe it's because the market was not ready to provide the answer. So we shouldn't actually you know, by forcing an answer to a question that we couldn't really sort of answer. So that's the process. And as you can see today, the document is organized in various sections, and here we are, you know, with good question or good answers to the questions I feel that we could get consensus around. Now, I think there's an extremely important message here from you know, all of us. You know, that goes for issuers, to investors, and to underwriters and banks. When we are dealing with sort of a new market and we are developing it, and as Denise was alluding to, yes, we are standing on strong shoulders from the green bond principles and social bond principles. However, the integrity is extremely important, because if we, you know, develop the market in a certain directions and it doesn't sort of live up to the integrity and the criteria that we want, we could end up with wrong answers to the questions. And this is where I think we have a big responsibility, all of us, to make sure that we can answer all the questions down the road, but making sure that we actually that we are not diluting the project, the product, and we are not sort of overselling and opening doors for greenwashing, etc.
Thank you, Lars. That really helps to explain how we've come to where we are and what we might be expecting. I think, Laurie, given your work as coordinator and as an underwriter, what do you think will be the thrust of the next spate of questions and guidance that the market is looking for? What are the innovations and formats that you are expecting, please?
Yeah, sure. Thank you. Thank you, Isabel. First, I would say, as a coordinator of the SLB working group, we see two key, let's say, subgroups which we are working on. First one is on KPI. We clearly see that there is need to clarify, and then we need some guidance of the relevance KPI that could be used depending on the sustainability topic. It's more or less easy when it comes to climate change mitigation. It's more complicated when we speak about biodiversity, for instance, or waste management. So there is many discussion, and we see that first, market participants, we need some guidance regarding what could be a relevant KPI depending on the topic, but as well to have some, let's say, indication regarding the benchmark sources or the initiative that exists as a whole and at sector level as well, to guide them in the definition of the scope of KPI, the boundaries, the calculation methodologies. So we are working on that to provide some guidance regarding the definition of KPI, and especially when it comes to calibration of targets as well. We will need to have some, let's say, common practices or guidance to be sure, as last mentioned, to be sure that we, at the end, we preserve the integrity of this market with sufficient level of ambition. So this is one key topic that we are working on, the KPI. The second one is on impact reporting. And there is many questions that we need to continue to explore regarding the, at the end, how we can aggregate the SLB related impact. There is no clear link between the proceeds, the amount of proceeds, and the achievement of the SPT. So there is many questions, and we need to work on that as well to clarify how to make the link between the bond itself and the impact reporting, especially for investors, being able to compare and to aggregate at the end SLBs within their portfolio, and to have this view regarding the impact at the end. And so there is some link as well with disclosure reporting directive that we clearly see. So impact reporting and disclosure is one of the main, the next step that we are working on within the group. And then as underwriter, I would say that the main discussion that we have with issuer are more on the innovative features of this format. And we have many discussions on the mechanism that could be contemplated. We, as all of you know, we are many, let's say, coupon step-up mechanism for the moment. And so the question are more what other payoff mechanism we can develop. Can we speak about step down on the coupon? Can we speak about other format of penalties going to support the achievement of the SPTs as well? So there is many discussion on that as well. On the topic, we clearly see that green or climate KPI linked issuances have been launched. But what about social issues as well? So we clearly see that on investor side, there is some interest to see not only green, but as well social KPIs. Even if there is some, let's say, constraint when it comes to ECB eligibility, when it comes to definition, calibration of targets. But this is one of the other challenge that we have as well. And I would say that the type of issuer, this is something that is particularly developed by corporates. But what about SSAs, financial institutions? There is many interest as well on their side.
Thank you, Laurie. So a whole range of things to look forward to and likely to see coming out of that group soon. Nicole, turning to you, please. As an issuer, what are the main benefits that the document brings to those looking to issue SLBs? I mean, has the guidance, for instance, clarified any key areas in relation to your own issuance of SLBs? And how do you think it will encourage more companies to come to this market?
Thank you, Isabel, for the question. As you know, we have been the first issue of this kind of product. We issued in 2019 the first SDG linked bond. And I have to say that our SDG linked bond are in the end compliant with the sustainability linked bond. So somehow we open the discussion, the sustainability linked bond market. I think that the guidelines and the principles that have been released by the ICMA are helped and played a very important role in the birth and growth of this market, because I do think that investors and issuers also need standardization, and these principles help in standardize also this market. As Lars recalled at the beginning, the principles helped in giving both investors and issuers and all the market participants, I would say, transparency and integrity on these new instruments. And we all know that at the base of the sustainable finance, there is transparency. And for sure, these principles help in enhancing the transparency of these new innovative instruments. I think that we do have three main milestones that certify the success of these instruments. First and foremost, the sustainability linked bond guidelines that has been released in June 2020. After the release of these principles, we have seen other issuers coming on the market, and so issuing sustainability linked bonds, and here it comes the standardization of the project, as I was saying in the beginning. And third, as Denise recalled at the beginning of this event, the ECB eligibility, because of course it's the third milestone that certifies somehow the birth of this new asset class, and it's for sure important in the growing of this new market. So I do think that yes, these principles, and we have worked in the writing of the principles, and we have encourage the release of these principles, because I do think that we need the rules, clear rules on the market. We need standardization, we need transparency, and we need also integrity on this market, as we do have the green bond principles, because we have always said that sustainability linked bonds somehow complement the other sustainable instruments that are already there. So green bonds, so sustainable bonds, and social bonds also. Now we do have another asset class that it's somehow different because it's true, it's not pure use of proceeds based, but it's much more performance based, and therefore the reliability of the KPI, it's really key and important. And that's why, as Lori was saying, we're working a lot also within the ICMA, trying somehow to give some guidelines on the KPIs and target, because this is key for this kind of instruments. But yes, I do think that these principles helped the birth and the growth of this new market. When it comes to NL, for example, yes, we issued our SDG linked bond in 2019 after the release of the guidelines. For example, we decided to set up a new sustainability financing framework with that cover, I would say, all our sustainability linked financial instruments. And we do have a second party opinion. So we inserted an external review of this framework in line with principles in order to adding transparency to, for example, to the reporting that we already had in the SDG linked bond through, for example, our auditors or DNV when it comes to CO2 reduction. But we have decided also to add these new layers of transparency, adding also the second party opinion, and this is in order to be compliant with principles. So somehow they help in enhancing this new instrument.
Thank you very much, and congratulations for spearheading the market, as well as putting into practice many of the developments that have come out of the working group. Perhaps, Laurie, turning to you, and maybe all the panelists can answer the question. Two of the major areas that we see at the moment that are perhaps contentious relate to proportionality. One is a question of whether the amount raised through the SLBs should be in some way proportional to the sums needed to achieve the sustainable performance targets. And secondly, in relation to the magnitude of step up or potentially step down, and whether this should be calibrated somehow to the level of ambition of the SPTs. What are your views on these questions of proportionality, please?
Yeah, one of the key questions, as mentioned, regarding mechanism, I would say that regarding the first one, you say the link between the amount of the bond and then the investment needs to achieve the targets. I think it's really complicated to value at the end the investment that you need to achieve your target. There is concrete investment, and in this case, we are more aligned with the green bond principles, and it's easy to, at the end, to identify the key assets that you need. But then there is many, let's say, practices or initiatives such as policies, management systems, internal carbon pricing, for instance. So there is many actions that corporates can do to finally contribute to the achievement of their target, which is absolutely complicated at the end to price and to make a value of that. So I think the link between the amount that you have and the investment that you need is complicated because of that. And then there is a gap in terms of timeline between the investment that you are doing now and the bond that you are issuing now and the real impact, the actual impact on your achievement of SPTs. So because of that, I think the link is really complicated. It's more strategy to say that because I integrate sustainability at the heart of my or transition or energy transition at the heart of my funding policy, I will or not issue sustainability linked bond. And the dimensioning is really complicated. There is many debate and discussion around how we can define some calculation rule or something like that. But again, really complicated when it comes to the pricing at the end of the action that you need to achieve your SPT. And this gap in the timeline is really key as well. What do you account in your achievement of SPT when it comes to a bond that you issue now and potentially you will see the impact on your CO2 emission in 5 or 10 years. So it's really complicated. On the second one, for the moment, as you said, this is more, let's say, absolute value that we've seen in terms of step up, around 25 basis points, like that, which is the major a step up that we've seen. And there is no clear link. This is one of the questions that we have in the Q&A. And as you say, there is no clear link with the pricing of the bond itself. So sometimes 25 could be really high for some issuers, and sometimes really more or lower for others. So there is no clear link between that. This is more market practices are like that. And when it comes to other format of penalties, if we consider some, let's say, some action to compensate, for example, the non-achievement of your SPT, it will be more complicated in this case. We will not be able to provide some, let's say, absolute penalties. Penalties will be certainly linked with the non-achievement of your SPT. So for the moment, step up are really relative, absolute, sorry, and not relative. But there is many questions when it comes to other formats and not only coupon step up in terms of the value that we give to the penalty. So no clear view on that. Sorry for my response is not so clear. No clear view. I'm just finally commenting the market. But this is our point of view, is to say that it's not so easy to do. And there is many constraints when it comes to the dimensioning of your investment needs to achieve your SPTs.
Lars, I can see you've already taken yourself off mute, so please.
Well, your first question in relation to the link between, the amount raised versus the targets, I think from our perspective, we will definitely look at the materiality assessment, and that from there we would, try to divide the KPIs, and of course, when we have the KPIs that are material, we can also set targets. And in that process, you would also need to describe what are your activities to reach these targets. And these activities should be other than business as usual. And of course, here you could have a situation where, these are proportional small compared to the money raised. And there we would clearly request the issuer to be transparent and to outline an explanation on that, and hopefully that will be sufficient to explain the amount raised. I think somehow there needs to be a connection. However, the whole idea is, of course, you're not necessarily it's not necessary to outline your use of proceeds in the SLBs. But materiality assessment and also description of your activities, that is something that investors clearly should demand, and then by there you should be able to judge. Now, in relation to the coupon or the bond characteristics, I think we had the example with Hennes and Mawritz. They decided to issue a bond with coupon adjustment. However, there were 3 KPIs sort of blended into the coupon adjustment, and these were blended with 40%, 20%, and 40%. One KPI was recycling of material. One was scope 1 and 2. And then we had scope 3 emissions. And clearly, scope 1 and 2 emissions for a company like Hennes & Mawritz was very small. Hence, they got the smallest, what should I say, weight in the bond characteristics. And that was a clear signal to the market. We want to have house in order by addressing our scope 1 and 2 issues. However, the most crucial things in the business that, within clothing, that is recyclability and scope 3. So that is an example of how the market has developed in a way to signal to investors that this is where we have our focus. Now, you can say then the amount of step up in basis points, etc. That's another thing. I think that's where we haven't got consensus there. But I think that's not the main thing for an issuer. The main thing for an issuer is to communicate to the market communicated strategy, and the step up is not the main focus.
And Nicole, did you see any pushback from investors saying this coupon is insufficient? Have you had discussions around the volumes required to achieve your target and whether or not they should be linked?
I would say no. Of course, when we came out with the 25 basis point step up and with the first SDG link bond, the sustainability link bond, we had a lot of discussion with investors trying to better understand which was the best structure that was fitting also in their portfolios. And that's why, for example, we decided to insert just the step up and not a step down, because the step down for certain investors doesn't work because they need to have a floor, and therefore it's not so let's say easy to manage a step down in such a kind of structure. Of course, it was an innovative product, and at that time this was the feedback that we received from investors. When it comes to the 25 bips, it's much more, I would say, a market practice than a specific link between the step up and the pricing. And when it comes to NL, the reason behind the 25 basis point was pretty simple, because what we're saying with our sustainability link bond, it's simply that sustainable finance means value, and with value we mean economic and financial value, and therefore we are not moving towards a sustainable finance just for the sake of goodness. It's not just the right thing to do, but it's there is also value behind that. There is value behind a sustainable business, because we have seen that sustainable companies are much more resilient with respect to the non-sustainable one, and this has been seen even more during this pandemic. And we have decided as a company, and we do qualify ourselves a sustainable company, because we do have the majority of our investors, more than 90% of our capex are devoted to sustainable business. So we wonder, why continue to go just on a project basis instead of thinking about the strategy? Just because when we issued our green bonds, because we started our path towards sustainable finance with green bonds, and when we issued our third green bond, we realized that all the proceeds, all our business were suitable for the proceeds of the green bonds. And that's there that we started reasoning about a much more general corporate purpose instrument linked to the strategy, in order to show to the financial community, to investor, to market participant, the path towards the transition, that any kind of transition. For us, of course, it's the energy transition, but I do think that we can speak about any kind of transition. And I think that is the strength of this kind of instrument. And I do agree with Lars in that I would exit from the logic of the use of proceeds when it comes to SLB, because I think that there is a different logic behind. We need to continue to work on the KPI. We need, of course, to have, as I was saying before, reliable and core KPI, because of course each company have to identify core KPI for the business that they are running. We cannot just have some ESG KPI, but it's completely away of our business, because otherwise it's difficult to define how there is the link between the path, the credible path towards the transition. But it's not very much linked to the proceeds to us. And then I close.
Taking that, I mean, we unfortunately have very limited time, and we've had a lot of questions come in, and I suppose if I try and fuse them, a lot of the questions are around how do investors then report, or because issuers are helping them, on the taxonomy, maybe just the EU taxonomy, but it could be other taxonomies? How does impact reporting happen so that they have some kind of clarity with that? How do you see your reporting helping with the requirements that they have on that side, which Laurie touched on?
When it comes to NL, internally we are running some analysis in order to classify all our business under the taxonomy, and we already declare the percentage of assets that are taxonomy aligned when it comes to NL. And that is something to me different with respect to sustainable finance. If we want to apply the taxonomy to sustainable finance, of course, it's much easier for green bonds because once again, it's asset-based. When it comes to sustainability-linked bonds, once again, it comes to KPIs. So we need to identify KPI that have to be taxonomy aligned, because of course, taxonomy is there and we cannot not to take into consideration the fact that we do have at least the EU taxonomy, that is the one that has been already approved. We're working on the delegated act, so it's there. And once again, when it comes to SLB, I do think that it's much more linked to the KPI and target than to the proceeds itself.
And Laurie, I mean, today I received an email on Verbund's 20-year bond in euro, which combined both formats, the green bond format and the SLB format. Do you think there's going to be an increased requirement for this joint format, partly to overcome some of these different aspects if issuers aren't able, as NL are, to link the KPIs very clearly to the taxonomy?
Yeah, some investors have expressed their intention to see more such format, to say that it's combining, let's say, a more static approach, saying your assets that you're investing in, and then the prospective or forward-looking approach that we have in sustainability-linked bonds. So we already know that some investors are keen to see more combined formats, and as mentioned by Nicole already, this is really complementary products, and they are not highlighting or demonstrating the same thing. So in terms of rationale and message, they are really complementary. So the combination of both is particularly relevant. I think it depends to the profile of the issuer as well. Sometimes it would be less relevant than other. And I'm thinking particularly to issuer where it's complicated to be able to put everything as a user proceed format. So the user proceed will be able to focus on some areas of investment, and with the SLB format, you will be able to embed another sustainability angle of your overall strategy. So it's sometimes particularly interesting for some issuers to be able to combine both, and again to reflect all the sustainability performance of the issuer. So yes, we think that it's something that will develop, and we see that there is some interest on the investor side, clearly.
And Lars, do you see the same? Is the main pushback from the issuers or from the investors?
Well, I think the combination of user proceeds and SLB, if you're able to provide that, actually demonstrate that it's a strong transaction in many ways. So I think to the extent issuers are able to do that, I would really welcome that. Now, in relation to impact reporting and aligning to taxonomies, etc., I think we all struggle with that. And of course, you can measure impact on an SLB. Let's assume you have a target on scope 1 and scope 2, and you outline a certain improvement over the years. Of course, you can, as an investor, say, here's my starting point, here's my end point, this is the impact that I achieved. The problem is, of course, with the use of proceeds, you have the project, you know exactly how much money you have put into this, so you can report your impact per dollar invested or euro invested. And that's the challenge that we have here. But it's the same with the taxonomy, isn't it? I don't think we have found the solution with the taxonomy in relation to turnovers, capex, opex, and all these things. But I think we're getting there. but a combination with the between the usual proceeds and an SLB is a strong instrument in my view.
Well, thank you very much. Unfortunately, our session is at an end. So before I hand back to Nicolas, I would like to offer my profuse thanks to Laurie, Lars, and Nicole for their expertise and insights. Thank you very much.
Thank you, Isabel.
Thank you.
Thank you, Isabelle Laurent, who is the Deputy Treasurer and Head of Funding at EBRD and an absolute pillar of the GBP Executive Committee. Thank you very much to the panelists. Just a quick comment on the questions. We weren't able to respond to all. I noted that there was a number of questions with regards to overall sustainability guidance, and I just wanted to remind everyone of the existence of our Climate Transition Finance Handbook, which provides overarching guidance for climate transition finance and can, of course, be combined with SLBs. Now, we're now going to go to our next panel, which is on the role of external reviews. This is going to be moderated by Marilyn Ceci, Global Head of ESG Debt Capital Markets, JP Morgan, also a member of the GBP Executive Committee and also an absolute pillar of what we've been doing in this space. Over to you, Marilyn.
Thank you, Nicholas. And I'm delighted to be here today. I'd like to welcome my panel. First of all, we have Viola Lutz, who's an executive director at ISS, who has been very instrumental in creating some of the SLB SPOs that are existing in the market. Second is Kevin Rainey, who's executive director of Sustainable Finance Solutions at Sustainalytics. Third, of course, what needs no introduction is Kenneth Pollingham, who's the executive vice president and portfolio manager at PIMCO, and Nicolas Vanier, who is head of finance and treasury at LafargeHolcim, one of our issuers of SLBs. Thank you all to the panel. So first of all, I think if we think about the topic at hand, it's external review, clearly, which includes not only second-party opinions or a pre-issuance view or external view on the issuer's offering in the market, but also what is now considered mandatory in the SLB principles is a verification. Which is most noted and most example is in the form of limited assurance. I also want to say one comment before we begin, that we published the update in June of 20 for external guidance. This is not actually a new document. We continue to update it for many years. And that was done with the assistance and the input that came from the Advisory Council, which has become an important part of the GBP Executive Committee process. And the most recent update, which now includes the SLBP, was published only in February of 21. So now I'm through with that housekeeping. So Viola, let's start with you. Ensuring that metrics are material, core, and relevant for the issuer, and that the SPTs are ambitious is of course subject to varying opinions. What are your priority considerations comparing an issuer against their own history, comparing it to their peers, comparing it to benchmarks like SBTI or Access to Medicine, Foundation Index? How do you think about all of these informing your opinions?
Yeah, many thanks for that question. It's indeed true. Whenever we work with issuers, what they really want to know is, well, is the KPI selected material and is the performance target ambitious? So I would absolutely say that it's very much at the core of every issuance. From an external reviewer point of view, what we see as our key role here with respect to those points is to create transparency. So we will assess a target across those three perspectives. So issuer versus own history, issuer relative to peers, and against external benchmarks, because we think that information needs to be on the table for investors to take good decisions. But, and I think that's key to mention here, I don't think an issuer needs to be necessarily ambitious against all three of these levels. So let's dive a bit deeper. If I would need to select just one that absolutely needs to be in place, because otherwise, let's have a discussion. I would say it's the level of ambition versus the historic performance of the issuer itself. Why? Because the very concept of a sustainability-linked issuance is to show progress. And if you're not showing a level of ambition in that progress, not even versus your own performance, then I think it would be good, to maybe give it another thought what other targets would be good. So why am I putting so much emphasis on that? Of course, it doesn't mean that the other two topics are not crucial. But let's take a hypothetical example. Let's imagine a world where all steel companies, every single one except one, have set themselves a science-based target. So now this one remaining company, steel company, that does not have a science-based target is coming to the market and says, we're issuing an SLB based on a science-based target. Would this issuance be ambitious against peers? No, but it would still very much be a very relevant issuance to the market, I would argue. So, and that is just to show that I think it's the interplay of these different factors that need to be considered. And external reviewers' role, in my view, is to give the transparency to the market so that investors have a good and informed decision basis to see, well, does the level of ambition meet my criteria?
Wonderful, thank you for that. So Kevin, let's lead right into you. Let's think about the way Sustainalytics is approaching the market. Have the external review guidelines been helpful? I know for sure that you have your own sort of green and transition finance taxonomy that you work with within Sustainalytics. Has that in any way helped shape or form your view or your approach to how you evaluate SLBs?
Yeah, thank you, Marilyn, and thanks for the opportunity to join this conversation. And thanks to ICMA for its outstanding leadership in this space. And as an SPO provider, we're on the front line, so to speak, when it comes to interpreting and applying relevant principles and guidance. These principles are very strong, but quite appropriately aren't highly prescriptive. There's too many questions to answer, and the market needs space to evolve and to innovate. And so a key role that we play is doing that interpretation and application. The team that I lead within our SPO business is our taxonomy team, which is in charge of the development and maintenance of an internal taxonomy that we use to define eligibility criteria for the use of proceeds in the case of use of proceeds instruments. And in relation to sustainability-linked instruments, our team has also taken the lead in developing the approach that we take to assessing SLBs. So we've developed a scheme, for example, that we use to evaluate the strength of KPIs, the ambitiousness of sustainability performance targets. We use this scheme to ensure that we can sort of apply a consistent approach to each novel case that we encounter. And indeed, there are many. I mean, it's actually a remarkable time in this space, a remarkably dynamic time in the evolution of this space, in the sense that almost every day issuers are coming forward with new uses of proceeds or novel KPIs and SPTs. And so our team has a mandate within our SPO business to stay on top of all the emerging standards and to be prepared to assess these, grounded in the principles and the guidance from ICMA. We need to look at these KPIs and assess them with respect to the key, the relevance materiality and other things outlined in the principles. And that often involves doing a deep dive into, for example, climate science, the trajectories, decarbonization trajectories relevant to different industries, the standards that have been brought to the market by various standard setters, such as Climate Bonds Initiative, the Transition Pathway Initiative, and so on. So there are many different resources that we rely on and synthesize in order to assess or provide our assessment of the strength of KPIs and the ambitiousness of targets. I mean, I note that we welcome innovation in the market, and there's so much potential for this to grow and to make a meaningful contribution to improving the sustainability performance of companies across the board. We aim to do that while ensuring that we're grounded in certain foundational principles that ensure the credibility of what we do.
Wonderful, thank you, Kevin. So Nicola, let me move on to you next. So as one of the early issuers, of course, of SLBs, congratulations. We're very happy to see you participate. Let me ask you, as you thought about your KPIs, how does that actually fit into your overall approach to sustainability and Paris alignment?
Sure, thank you, Marilyn. But first of all, we are really taking a science-based approach to our sustainability journey, to our net zero path. And last year, in 2020, we signed a pledge with the Science Based Target Initiative, SBTI, where we set ourselves targets which are the most ambitious in our industry. And the main target within this concept was and is today the 475 kilo of CO2 per ton of cementitious material, which is 17.5% reduction compared to the 2018 baseline. So we will achieve this with various levers. For instance, we will reduce the use of traditional fuels. We will increase the use of alternative fuels. We will increase the use of alternative raw materials. And we will also develop new solutions, new building solutions, which will be greener with, for instance, global brands such as EcoPact, which is a concrete with less CO2 than the traditional concrete, at least 30% less. And with all those levers, we will achieve our target of reducing our carbon emissions to, again, 475 kilo per ton of cementitious material. I repeat this because it will be important in the context of the bond, the sustainability-linked bond that we issued. Now, this target is 2030, but with SBTI, we are even looking beyond 2030, and we are working together with them to set climate targets which are in line with the 1.5 degree scenario.
Wonderful, thank you. So Kenish, last but not least, in the end of the day, we can structure all these bonds and the external reviewers can write all kinds of opinions, but in the end of the day, will the investors buy it and how do they view it? So your perspective here is quite important. As one of the early investors encouraging the development of the SLB, maybe you can talk a little bit about how you like to think about an issuer's approach to relevant KPIs and how to measure their SPTs, or how to think about the level of ambition of the SPT.
Yeah, I think hi Marilyn, first of all, thank you very much to Ecb for giving me the opportunity to speak. Nice to see you again, Marilyn. It's been very recent since we last spoke. So I think the first consideration when looking at an issuer looking to come to the market in the SLBs is the issuance has got to be, and their ambition has got to be relevant, core and material to the overall company's business. That's what it says in the handbook, and that really is what we look to when we look to an issue. It's got to be a strategic fit to that company's part of their strategic fit. It's got to be relevant to their current business. It isn't meant to be as maintenance of business as usual. It's got to be trying to target some form of improvement going forward. The classic example would be, say, the percentage of renewables in installed capacity for a utility. And so, if you say, right, today, this is my spot level of renewables. In 5 years' time, this is my ambition. And in 10 years' time, this is my final point, say, for maturity over a bond of 10 years. We want to make sure that the company is making reported progress over time. Is the topic you and I have discussed before, is that not everyone can make immediate impacts and change straight away. But what we want to see is accountability for that change over the period of the bond, and have interim targets, if that helps to explain, to respond to your question.
Let me ask a follow-up to that. If we think about it, every time we have an issuer in a new sector that comes with a sustainability linked bond, the question is, where do they rank versus their peers, right? And so Viola touched on this a little bit. It's often a bit of a challenge. There's only going to be one in a sector at the top, and there'll be one in the sector at the bottom. But the reality is, most of the other issuers are going to be somewhere in the middle. So how do we give comfort to the issuers that if they're not the top, right, in that sector, that their KPI and their, of course, SPT is still ambitious? How can you, as an investor, give them comfort?
I think the premise has got to be that there is an ambition to change from current state and to improve outcomes at the end of the project that they've aligned themselves to via the SLB. So an SLB is not a use of proceeds instrument, as well documented. However, it does identify a target in the future to which it needs to be achieved. Now, if you start at, say, at a very low level and your rate of change is notable, that's fine, but that's going to be taken into consideration when you look at that issuer. Similarly, if you are already close to your final target, but you still have that ambition to close that gap, that's still an appreciable change. If it's defined to be an appreciable change, a material improvement, then surely that should be rewarded as well in terms of consideration. But it's all about how much this will to change sits within the company's overall strategy going forward.
So we get back to transparency and disclosure, which is where we started in 2014 with the green bond principles. So makes perfect sense. I allow for that. Okay, Viola, let's get a little tricky now. Let's start moving into the hard to abate sector. I think many of us envisioned that the green bond market historically had not welcomed the hard to abate sector. It just hadn't. Any of the transactions that came in often were met with, shall we say, less than love by the broader community, both the press as well as some investors. So let's think about how we've now, or have we now, right, created a vehicle by which some of the issuers who are in the hard to abate sector now can really be welcomed and demonstrate their commitment to sustainability. What's your thought on that?
I would say yes. I think the SLB can serve exactly that, because the entirety of a company and its transformational journey, in an ideal case, of course, stands in the focus of such an issuance. And I think there are a couple of elements to take into account, but yes, I think we've seen already issuances from companies that are in hard to abate sectors that are taking that path. And I think and hope very much that we see more so, because I think this is really where this market can also have very much of a dent. But in Marilyn, you said it, you can't deny that if you're from a hard to abate sector, you will face scrutiny. And that's the case. So what that means is be prepared for that. And that is very much possible. And these are maybe just a couple of thoughts that I would, just based on our experience now working with a couple of issuers in those sectors, a couple of thoughts that I think are key to keep in mind very practically. And that is, I think what's so key, and it also links to what Keter said, is that issuers really need to explain very well their level of ambition. Why do they think it's ambitious? How does it link to their transformational journey? Second, as much as possible, use external and objective reference points to make your argument. There is a certain level of scrutiny in the market, and having this independent benchmark that makes the case for you, that you reference yourself against, will go a very long way to kind of creating also credibility around your action. And the last one, and that seems to be a theme here today, is transparency. And I think especially in hard to abate sectors, it's of course also about climate. So especially when it comes to emissions that are planned to be reduced via technologies that are not yet commercially viable. So I think what's fair to say in hard to abate sectors, carbon capture and storage will in some form or another likely be part of the equation at some point. And we can see that because a lot of the climate scenarios have negative emissions at some point in the time trajectory. What's key though is, well, since it is not on a large scale commercially viable yet, if you include, for example, such technologies, be transparent, put down your assumptions and communicate around them, because otherwise you're leaving a big black box essentially in your issuance. So I would say, be very be very clear about your level of ambition, use the external benchmarks, and be transparent on all the key points. And then I think it can be a fantastic instrument for such companies.
Wonderful, thank you for that. So Kevin, let's shift our gears a little bit to social KPIs. So Sustainalytics was the first to actually opine on an SLB with social KPIs if we look at Novartis. Can you talk a little bit about your process and how you think about it? When you think about climate, it can become very quantitative and much easier to evaluate, more black and white. When we start talking about some of the social KPIs, maybe you can share your thoughts on that. You're on mute, Kevin.
Sorry. Yeah, thank you. It's a great question, and we think that there's a lot of potential to develop social KPIs. We'd love to see more in the market in using the SLB format. For us at Sustainalytics, I mean, we have had now close to 30 years as a provider of ESG research and analysis. So we know this, right across all the sectors, are very familiar with how the space has developed, how indicators have developed, how impact measurement has developed over the years. And so we're able to bring that to bear as we consider novel KPIs. And so the case of Novartis last summer, which was one of the first SLBs, was one that we provided an SPO on, the KPI that they brought forward was related to access to medicine. Quite an important issue for them as a pharmaceutical company. It measured the patient reach of certain medicines intended to fill gaps in disease treatment. And so that we went through the process that we generally go through with clients, which is to engage deeply with them, working to understand what is being measured, what kinds of impacts can be expected, thinking about the ambition, in this case, largely in relation to the company's past performance. And this is one. It's an important example of how the basis for assessing ambition does need to vary. With something like what Novartis was doing, it's not something that could be benchmarked against some external, benchmarks such as a carbon decarbonization trajectory. And so it's quite possible to take a case-by-case basis to provide a meaningful assessment of alignment, or story of ambition, and we expect that with many of the social KPIs, that's the approach that we will take.
Great. Okay, thanks for that. So, Nicola, let me ask you this. You had a choice of using use of proceeds or of using an SLB format. How did you decide to come with the SLB format? You know, maybe you could take us through a little bit your thought process and then the overall reaction, either internal or external, to the decision you made and the instrument you chose in the end.
Sure. Thank you, Marilyn. But first of all, we don't see the SLB, the Sustainability Linked Bond that we did last November, as a one-off. It was part of the whole financing strategy, which we had designed at the beginning of last year, 2020. And by the way, it did not start with bonds. We started with cash. So we did some sustainable deposits. We also amended all our bilateral committed facilities to link the cost of those facilities to our Sustainalytics rating performance. We also set up an ESG ECP program, so a program to issue commercial papers, which is again linked to our Sustainalytics rating. And then we came across the idea of issuing a bond within this whole framework. You're right, we had the choice between the two, use of proceeds or a Sustainability Linked Bond. But at that time, the principles had been clarified. We had seen a few examples already on the market. And we were aware that our new strategy and the new targets with the pledge signed with SBTi was about to be done and to be announced. So we waited for that. And then we kicked off the preparation work for the Sustainability Linked Bond because we really wanted to have this bond instrument to support this strategy and to support the core objective, which is this 475 kilo of CO2 per ton of cementitious material. For us, it was really the tool which complements the best this strategy, and it shows the market the strength of the ambitions of the commitment that we were taking. That's how it went. But again, that does not exclude the other sort of instruments. So, you know, we are open to the different forms of sustainable financing.
Well, it sounds like the executive committee, we're going to have to invent a new instrument because you've done all of them that exist in the market. So congratulations and thank you for all your support. I'm sure the investor base recognizes all of your inputs. So Kedish, let's think about this now. We have new instruments. We intentionally were not prescriptive. How do we take it to the next level? What should we be thinking about, you know, going forward?
Well, I think first of all is to say that having this wide choice of sustainable type instruments is a good thing, and that the market can continue to develop. So green bonds and social bonds very much have their place going forward. They're very much a pillar, a very key part of the market. And sustainability linked bonds offer an avenue which is complementary and by no means looking to replace the concept of social or green bonds. They can sit very happily together. Sustainability linked bonds are a relatively new instrument. The issued universe is relatively small, and it needs to grow over time. You know, I work, as you know, with Laurie on the working group for the KPIs, trying to come up with KPIs. But one of our driving guidelines in that is not to be overly prescriptive right now, is not to start trying to write perfection before we've actually had any practice. And I think that's very important, is to let the market develop. There are certain criteria which I think are important. You know, we as a firm believe that, say, an investment grade company has a step-up structure. A high yield company should have a higher step-up structure in the context of their rating differential. And we think that that's quite important. We think that, say, issues that come should have interim targets as a rule, a willingness to report annually, which is all part and parcel of the packaging anyway. We like interim targets. It does help give us guidelines, and it gives us a view of the company's rate of progress. Complicating instruments right now is a luxury that, say, I think one should wait for rather than expect right now. Simplicity is a good thing in sustainability-linked bonds, in our opinion.
So let me just touch on one thing that you mentioned, which is interesting. The amount of the step up should differ whether you're investment grade or high yield, right? That's your view. Should it be more nuanced and be a percentage of the overall credit spread? Or do we think about it just simplistically 25 for investment grade and some number 25 plus for high yield? Is that how you're thinking about it?
So when the first bonds came out, 25 basis points was where and it was a material impact on the coupon potentially for the issuer to pay. Since then, rates have changed, but ultimately 25 basis points seems to be where we have settled. We don't see 25 basis points as written in stone. This can evolve, but as I said at the start of, say, previous comment that I made, we're right at the start of the development of this market. It hasn't been around for very much longer. And to turn around and say to you, right, it's got to be this multiple or that amount, I think would be both unfair and also probably presumptive.
Perfect, thanks for that. So Viola, did we miss anything in the principles? Is there anything that you could think of that we should have included?
Yeah, I mean, I do think that the whole question of what benchmarks to use, that any guidance around that would be very helpful for the market. I do think that it's not by chance that we have seen more issuance on climate than on other topics, for example. I mean, ISS, for example, is very much known also as a governance house, right? We have a lot of information on governance, of course, also environmental and social topics, but there are so many topics that I think aren't touched upon yet, whether it's diversity or other environmental topics like seeing more issuances around water targets. And I think one element that creates a lot of question marks when potential issuers are considering the topic is, well, what can I use as a reference point? How could I formulate and structure my KPI? What could I reference to see what would be considered, if I want to be a front runner, what would the target for a front runner look like? So I think creating more of a repository of where issuers can access that information, have it at their fingertips would be helpful. Because of course, houses such as ourselves, we do have a lot of knowledge. And of course, as soon as someone approaches us, we can support in that process and give inputs. But I think the initial step is that an issuer needs to think about it in-house and start creating a certain level of comfort around the concept. And for that, I think public information easily available, for example, via the ICMA website would be a boon to the market.
Wonderful. Okay, so Nicholas, let me ask you one other question. I want to make sure. Now you've been through the process, you've been through several processes over a variety of instruments. As there are potential issuers in the audience today, how challenging was it for you, both internally to get sort of sign off, as well as sort of the actual process of doing an SLB?
Okay, I think the issuers should not be afraid of it, because yes, of course, it's a bit of a challenge. It requires a bit of preparation. For us, I think it's fair to say it took us 2 months to really, from the kickoff to the end, to the closing of the transaction, which is a bit longer than a traditional conventional bond, but it's not so dramatic. And we really had a fantastic traction internally. The amount of work you need to put together is of course higher than a normal bond, but then it's very nice to work with many departments within the organization. You need to work of course with the banks to help you design the project and the bond. You need to work with the second party opinion provider. In our case, we worked with Viola's colleagues at ISS. And it was very important for us to ensure that the target was the right one, that it was ambitious enough, and that the KPI was really, material and relevant to our industry, so that it can speak also to the investors and make sure that what we are doing makes sense. But it was really a fantastic journey. I would really recommend it, because also what was nice to see is the diversification which we could achieve with more than 50% of the book building, which was in the hand of green or dark green investors. And this was one of the goals we were after, and we are very happy about the result. The surprise which came on top, like the cherry on the cake, was that we achieved some savings compared to a conventional bond. It's very hard to assess scientifically, but we believe it was in the context of 5 basis points, which was not expected when we started the journey, but we were very happy, obviously, about the outcome. So yeah, I would definitely recommend it.
Perfect. Well, we have about 4 minutes left. Kadish, I have one question for you that we were very uncertain about when we actually started this whole journey. And that was, where will asset managers place these bonds? Because if you don't have a use of proceeds associated with them, those that have green bond funds will require to have a use of proceeds. How do you incorporate SLBs into your overall client management portfolio?
So SLBs appear in a variety of portfolios across the firm, and it's the starting point for anything that we buy has got to be valuation. It's got to be risk versus rewards. It's got to be where does the rating, what's potential rating evolution? How does it stack up versus other sectors in terms of relative value? And they're assessed in exactly the same way as any other bond is assessed. The point of buying a sustainable bond purely because it has that label doesn't drive the way we look at buying something. It has to be driven by ultimately the value that the bond gives to the overall portfolio. So to answer that point, it's not, as you say, it's not a dedicated green bond, so it doesn't sit in dedicated green bond accounts. We have portfolios which are ESG labeled, and then we have portfolios which are not. And it's quite possible that an SLB will appear in any of those portfolios.
Great, thank you. And so, Kevin, we have just 2 moments. As you think about this, you've been extremely busy. We all know on the structuring side, there's a queue, and it's getting longer and longer to get second-party opinions. How do you think the demand will be for as we approach the second quarter here for opinions?
Well, our forecasts are getting sort of growing almost by the day. There are it's been really encouraging the amount of interest in this new format, and so yeah, we expect to see a lot more, and we expect to face new questions every day, new challenges as we assess again, KPIs and ambition. But overall, we think it's great for the market. It provides a sort of a richer set of options, and so I think the growth is a great thing for sustainable finance in general.
Wonderful. Thank you for that. And I'd like to thank the panel again. We've run out of time. Kadish, Nicola, Kevin, and Viola, thank you very much for joining today. And Nicholas, back to you.
Thank you.
Marilyn, many thanks, and many thanks to the panelists. It was a great and interesting discussion. We are now going to turn to our keynote. We are very pleased to be able to welcome Pauline Les, who's the head of Collateral Strategy and Asset Eligibility at the Banque de France. And she is going to speak to us on the topic of eligibility of SLBs for the Eurosystem asset purchase and collateral programs. Pauline, over to you, et merci beaucoup.
Thank you very much. Bonjour. Thank you. Good afternoon. Thank you to ICMA for inviting me to speak on this very topical issue of sustainability-linked bonds, especially in the euro area, since SLBs have recently become eligible for monetary policy purposes with the Eurosystem. This presentation will mainly focus on the European perspective and how the new eligibility rules for sustainability-linked bonds are implemented in practice by the ECB and national central banks throughout the euro area. Following the emergence of the first sustainability-linked bond in 2019, and we can move to the next slide for this one, the Eurosystem has announced in September 2020 that it would start accepting SLBs from January 1st, 2021. This is a first step in the path to include climate-related aspects in its monetary policy operations. So the Eurosystem has decided to carve out an exception to the existing rules by allowing eligibility to bonds with coupons linked to sustainability performance targets, despite their step-up characteristics, which are usually not eligible within our framework. This means that SLBs are now accepted as collateral for credit operations, but also that they can be purchased under the asset purchase programs, primarily in the CSPP currently, provided that the assets comply with all the other eligibility criteria, of course. So as of today, the Eurosystem has granted eligibility to just under 10 transactions, but based on the interest that this conference and this event has garnered, we can expect this number to go up in the next few months, and hopefully with the support of the ECB eligibility, that will happen. So how does it work in practice? Today, I will focus on the practicalities of SLB eligibility with the Eurosystem. What are the rules that we've put in place, and how are they implemented by national central banks when it comes to collateral and APP eligibility? So to begin with, we have to look at how the rules have changed on the next slide. The general documentation now states that in order to be eligible, debt instruments can have multi-step or floating coupons with steps linked to sustainability performance targets. So the sustainability-linked coupon can be either fixed or variable. It can include a step up or a step down, that does not matter. And this change can happen anytime during the life of the coupon, including on the last coupon payment. It can also be in the form of an additional premium, as long as the principal is repaid at least at par in any and all circumstances. Next, we have to look at what is a sustainability performance target according to the Eurosystem in the next slide. Let's look at the definition. Sustainability performance target means a target set by the issuer in a publicly available issuance document measuring quantified improvements in the issuer's sustainability profile over a predefined period of time, with reference to one or more environmental objectives. So let's dissect this definition. First of all, the target needs to be set by the issuer. On that point, the Eurosystem has adopted a pragmatic issuer group approach, like it does in the CSPP, since the bond can be issued either by a financial subsidiary, by a holding company, or by the issuer itself, the main company producing the product itself. We allow sustainability targets to be set for or met by one or multiple entities within the same group. That means that if a financial subsidiary issues an SLB with a target set for the group as a whole or for another entity in the same issuer group, then it may be eligible. Then the target needs to be specific to the issuer in the way that it measures quantified improvements in its sustainability profile. It should be devised in a way that incentivizes the issuer to improve its environmental sustainability profile. For instance, the reduction in carbon intensity or GHG emission of an issuer or an issuer group are currently considered as relevant targets, but the improvement in an ESG score or the achievement of the EU climate target plan do not fit the bill because they are not directly at the hand of the issuer. These targets need to be described in a publicly available issuance document. By that we mean a prospectus, final terms, or offering circular of the bond. And finally, the target must be achieved within a predefined time period, at the end of which an independent third party must verify whether the issuer has met its target or not. Please note that at this point, we only require that a third party verifies the target. We do not currently require a second party opinion. or on the structure itself, or the publication of a sustainability framework. I would also like to point out that the eligibility is not subject to the actual fulfillment of the targets by the issuer. If the issuer does not meet its SPT or SPTs, the bond will remain eligible, and we will simply apply the higher coupon formula if we take it as collateral, or if the asset has been purchased at the APP. And last but not least, the definition mentions environmental objectives. So let's look at the next slide to understand what we expect in terms of eligible environmental objectives. They must be linked explicitly, the KPIs, the SPTs must be linked explicitly to environmental objectives set out either in the UN Sustainable Development Goals or the EU taxonomy. When it comes to the UN SDGs, they are not all created equal. Only the goals relating to climate change or environmental degradation are eligible, meaning that only targets relating to SDGs 6, 7, 11, 12, 13, 14, and 15, which are listed on this slide, may be eligible. It is possible, however, to mix and match within the list of eligible SDGs. So issuers may set one or multiple targets relating to one or multiple SDGs within that list. However, it's not possible to combine them with other SDGs outside of that list, such as social SDGs, since they are not in the scope of environmental objectives that the Eurosystem has decided to focus on at present. When the EU taxonomy will be in force, targets relating to the 6 climate objectives listed on this slide, which are part of the regulation, will also be considered as eligible under the same principles and conditions. Since the Eurosystem is not, at least not yet, a climate specialist, the mapping between the targets or the KPIs and the objectives they relate to must be clearly stated by the issuer, ideally in the issuance documents of the bond, but we will also have a look at the sustainability framework and the second party opinions in order to complete our analysis. Hopefully, the rules of eligibility are a bit clearer now to you. Don't hesitate to send questions via email to ICMA if you have further questions. Our goal is to help the development of the market, but also to work more widely on the climate issue and how to incorporate them in our monetary policy framework, but also outside of our monetary policy operations. And I'll just mention a few steps we've taken forward since this decision to allow the eligibility of sustainability-linked bonds with the Eurosystem. First of all, I'd like to talk within the Eurosystem about the Ecb Strategy review that has a work stream dedicated to climate change and how it interacts with its main areas of intervention, such as macroeconomic analysis, supervision, and financial stability. The Eurosystem has also announced in February that it will start making climate-related disclosures for non-monetary policy portfolios within the next 2 years by the early 2023. On a more global level, the NGFS has published just yesterday a report entitled Adapting Central Bank Operations to a Hotter World, which reviews options to alter central bank instruments in the face of climate change. So there is a lot of work ongoing, and we can expect more decisions to be taken in that respect to help the development of sustainable finance in the euro area, at least. Thank you very much.
Pauline, thank you very much for that keynote speech, and congratulations to the leadership and the initiative of the Banque de France and of the Eurosystem and the ECB. Of course, we were delighted to collaborate on the implementation of your decisions. And for those that are not aware, the information requirements of the Eurosystem are integrated now in our templates to make it as clear as possible for issuers what is required by the Eurosystem. With that, I'm going to say a few concluding remarks. First, I would like to welcome, of course, all the speakers, all the panelists, our keynote speaker. I noted that there was a tremendous amount of questions coming through in the Q&A. I'm sorry we didn't have the time to have more time and space to answer those directly, although I think a great deal were picked up during the discussion. I'd like to point out that you can access ICMA's website at www.icmagroup.org, where you can see all of the guidance that we provide. Of course, the headline documents, the GBP, SPV, the SLBP, and also the Climate Transition Finance handbook. There's also, of course, all the Q&As. One of them was a topic today, the specific Q&A for the SLB. So please access that information. I think it is really helpful. I'd also like to underline that we have an education effort in this space, and you can also see this on our website. And then finally, of course, for those representing organizations here, either in the private or the public sector, you can, of course, join as GBP members or observers, so that you are on our email list and in our news flows, and can participate in the events and also in the governance of the GBP SPP, again, depending on the status of your organization and its role in the market. And with that, I'm going to close this event. Again, many thanks to all, and we will be back shortly with other events. And I think our next one is going to be on climate transition finance. Thank you very much.